Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. I wanted to start today by pointing out a subtle yet significant shift that I was noticing over this weekend. And that subtle yet, I believe, significant shift is that when I was down here, right, when the market was down here at the lows, anywhere in essentially this neighborhood, right, all throughout here, it was, you're wrong, you're wrong, you're wrong, you're wrong. No way we're going at all-time highs. In fact, I have said many, many times before, this entire rally, okay, has been the most angriest, most doubted, most shorted, most salty, most toxic rally of all time. But listen very closely to the key subtle difference between you're wrong, you're wrong, you're wrong, we're not going to all-time highs, no way you're getting left translation in Bitcoin, why are you trying to be different, okay? Why would it do something that it's never done before? Now what I'm noticing is it's you're wrong, you're wrong, you're wrong, no way this thing tops in July. Okay, no way they don't grease this thing all the way through to after the elections. So it was, you're wrong, you're wrong, you're wrong. The market can't possibly go to all-time highs. You're wrong, you're wrong, you're wrong. We can't possibly have Bitcoin left translate or make an all-time high before the halving to, you're wrong, you're wrong, you're wrong. No way this thing tops out in just a few months' time. So I believe this is a very, very subtle yet significant shift. As always, I am taking this thing one day at a time. I'm by no means suggesting that just because it is an expectation that we get a top around July or August of this year for risk assets, that I am not open to seeing perhaps a top come later. Maybe it's a month or two later, or maybe even it comes Q1 of next year, Q2 of next year. I'm also open, as I've said many, many times, to seeing something like this, okay, and then just a standard bull run. No blow off top, pretty much what we did back here, perhaps, or even if we zoom all the way out, maybe, okay, maybe we've just got something like this to occur. So maybe there's really nothing too bad along the way for the foreseeable future. But like I said, I couldn't get away from that. And I think it's pretty significant because it's exactly what you'd expect to see. Okay, people that had been doubting this rally the whole way up, that's fine. Okay, that's why we went higher, because everyone thought that we couldn't possibly go higher. That's why Bitcoin made an all-time high before the halving, right? Because no one was expecting it. If we pull up a Bitcoin chart, all in here, people were waiting for lower numbers. All in here, people were saying, no way, it's going to roll over. All in here, people were saying, look, it's chopping sideways. It can't possibly move higher. And then they missed all of this. They probably bought in the top. And now they're going, yeah, no way, that's it, right? No way it's possibly over now. But if you really think about it, this is exactly what we want to see for any kind of blow off top, okay? At a top, I can't be calling tops if every man and his dog is also calling tops. I can't be calling tops if people want to hear it, right? That can't be a thing. Everyone has to be positioned to the wrong side. Everyone has to be convinced that there's a new paradigm, that we're going up only forever. And I've even been seeing some comments on Twitter that are saying, Camel, you must be wrong, right? We can't possibly top this early. And then when they're probed or someone else says, can you share why you think that? They essentially say, I don't want to believe that. I don't want to believe we top in July. Okay, well, I don't either, if it's any consolation, right? I don't want to believe that this market might only have a few months left. I would much rather, as I've said a million times, be invalidated and continue doing normal things, okay? It's easier to trade, it's way easier to deal with, it's way easier to predict and to handle in real time than something like this would be. But like I said, whilst this shift is subtle, I believe it to be significant. And I'm saying this now, I've been saying this for a long time, you know, all the way up it was bear trap, it was this, that, the other, it was double top gang. But remember, at the top, we want to see the proliferation of no recession, okay, no more cycles, no more bear markets. Soft landing was masterfully engineered by the Fed, right? We want to see whatever the narrative is, but what we don't want to see when we're up here is recession's coming, okay? We don't want to see that. We don't want to be seeing people up here not greedy, not euphoric, not telling you every dip is for buying, okay? So just be aware of that. If we continue to see people get more and more excited, more and more euphoric at the top, then again, that is normal and to be expected. That's what we want to see, and that will help us to identify a top in terms of sentiment. So hopefully I'm wrong, right? Hopefully the market has more than, 8 weeks or something, 8, 10, 12 weeks maximum. Hopefully it has more than that left in it. But the more people start to say, no way, no way, no way, no way, then the more I like to be on the opposite side of that. And one final thing, okay, because people often get this wrong about the herd and the crowd. It is at the major inflection points that being a contrarian is the right thing, okay? Down at the lows, when every man and his dog is posting 2008 Doom fractals, you do not want to be in that crowded trade. But sometime in the middle, okay, somewhere around here, let's say, the herd can be right for a while. Why? Because it doesn't take a genius to see the prior all-time high level, if I put that in, okay? It doesn't take a genius to see this, okay, all the way up to here, through the all-time high, and then start to say, you know what, this thing's probably going higher, right? Bear market rallies don't tend to just go back through the all-time high. So the herd can be correct in the middle. I believe that's where we are now, right? They're going to call for higher numbers and they're probably going to be right for a while. But then again, remember, similarly to just how everyone was one-sided down here, every man and his dog saying lower, 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 up here, every man and his dog should be telling you to buy stocks, should be telling you up only forever, print to go bear, they can never allow another recession because of the election, whatever the narrative is, okay? And maybe there's some truth to some of those, but either way, okay, look for this to be an inflection point just like this. And in the middle, you know, it doesn't take a genius to be looking at a stock market at all-time highs and say, you know what, it's probably going higher, right? So a subtle, yet I believe significant shift. Let's look for more of that to continue. We are also seeing, this was brought to my attention this morning, Morgan Stanley's perma-bear Michael Wilson has just capitulated and turned bullish on stocks. Again, that's what we want to see, right? Things are coming together. We want to see the opposite of panic selling. We want to see panic buying. People sitting there and saying, I can't possibly be bearish anymore. I have to get in on this action. I've missed the entire thing. Get me in now at whatever price. Let's not worry about anything else. Just get me in so I can capture some gains. If there's any indication to get ready for a pump, this may well be it. Once the final bear turns bullish, that is when we will top, of course. A couple of interesting pieces of information that I think we can use to build on yesterday's deep dive is out of all the parts of the CPI, this is probably the most meaningful. We know that OER and rents make up around 43% of core CPI, and they are a big reason for the sticky prices. But rent prices are starting to crack, which should mean OER is next. So what does that mean? Rent of primary residence, okay, this is the rent component of the CPI basket, is now back below the 2018 to 2019 average, okay? Hard right edge, remember all of this housing and shelter stuff is a lagging component. But at the hard right edge, okay, rent is now starting to cool off significantly. And like I said, is back below the 2018 and 2019 average. And this tells us that we should start to see OER, the owner's equivalent rent, start to come off as well. So if indeed we continue to see these components come off, if they continue to sit below the 2018 and 2019 average, okay, before this whole inflation problem began, then should we not expect continuation to the downside in the CPI print, more disinflation before perhaps even ultimately deflation? Again, not a popular narrative, okay? Not a popular narrative, but that is how we like them on this channel. And if you're not convinced, take a look at this. Maybe, just maybe, this is the setup we have at play. Just like the post-World War II inflation boom-bust cycle, there was an intermediate pause before disinflation resumed. Just to be really clear, in case anyone doesn't know, disinflation means the CPI is falling, okay? From 5% to 4% to 3%. Deflation means we've gone negative. There was a pause before disinflation resumed. Without commodities inflation spike, mostly an impossibility not to disinflate, regardless of your X and Supercore data set. So here you can see, okay, 43 to 49, this is the CPI chart. You'll notice the end of World War II, right here. What happens? We get a spike, okay, a downtrend, a counter-trend wobble in the data, followed by resumption of disinflation before deflation. And of course today, we have seen the end of the pandemic, and of course we got that leg down, the sideways wobble before potentially seeing the resumption of disinflation and ultimately deflation. So is this what is at play? If indeed this is correct, then should we not start to see disinflation resume in the not too distant future? I think we should. If continuation of disinflation can't bring rates down quicker than most people are anticipating, then maybe unemployment can, okay? We have to ask the question here, how much of the US unemployment data is being suppressed by increased public sector employment or the zombie companies propped up with financial aid? So in the red here, we've got the US Treasury federal budget deficit versus the unemployment rate in blue. Notice, okay, notice the divergence at the hard right edge. Quite similar to what we saw here and here before, of course, that big spike. Are we going to see a same or similar setup here and here, okay, before ultimately they both spike to the upside. Of course, if we are to get that, that will certainly put pressure on the Fed to see these premature rate cuts. And notice here at the top, okay, federal deficit at 6.5% of GDP, which implies an 8% unemployment rate, okay? So we know they've been fudging the data, right? We know they've been quietly revising the jobs data on almost all of the prints. I think out of the past 13 or 14, they've revised at least 8 or 9 of them quietly 2 weeks afterwards. Does that fill you with confidence that the data is robust, trustworthy, reliable? Slowly but surely, one by one, the dominoes are beginning to fall. There's also this that I don't really want to talk on. I just wanted to point at it and say, if you know, you know. Because this Australian pension fund that manages $135 billion worth of funds just had its entire account wiped out at the Google Cloud, including all its backups that were stored on the service. I don't know if there's anything to read into this, and I'll just leave that to you. I don't want to say anything else about it really, but ponder that for a moment. Next we have this, okay, the chart, which is the Dow to gold ratio, is telling us something major is unfolding, allegedly, right? That is at least what this tweet says. That is at least what is circulating Twitter. I'm seeing this chart all over the place this morning. People were tagging me in it and stuff. And tell me if I'm wrong, right? Tell me if you disagree. But I kind of think there's no signal here, right? There's no real signal. And it's easy to look at this and say, wow, yeah, the last time it broke down, right? The stock market crashed and gold outperformed. And the last time it went down, right? The stock market crashed. And the last time it... Yeah, okay, that's true. That's true. But I mean, this is really just Dow priced in gold, right? That's really all this is to me. So if the stock market is going to crash, shouldn't we be looking at the stock market chart, right? Shouldn't we be using that? If gold is going to rally, shouldn't we be using the gold chart? Oh, wow, look at that. Okay, gold doing gold things. But, you know, if gold is going to break out and go on a big bull run, shouldn't we be using this chart to worry about that? This ratio, and I might be missing something here. If I am, please call me out on it, right? But this, to me, I don't know how much signal we can really use from this. Right? Are you going to price the Dow in gold? Are you going to exchange your Dow for... I don't know. What am I missing here? Right? Kind of interesting to look at. But in hindsight, just because we've got that, does it mean that we can't do this for a while? Right? It doesn't really, does it? I guess it does imply that if this breakdown is for real, then the Dow Jones should be outperformed by gold. But I guess my question is, do you consider this signal? Is this noise or is this signal? Because I think personally, I would much rather be looking at gold, okay, trading gold and looking at the stock market, like I said, looking for those breakdowns. Of course, when the breakdowns occur, that'd be the time for me to exit. That'd be the time for me to think about shorts. And then, of course, we could come back here and probably say with hindsight, well, yeah, we would expect that to look like that. But is there actual signal in this chart? I'm not really convinced, although I have been seeing this all over my timeline this morning. So let me know what you think about that. I've got a nice chart for Bitcoin for you as well, just before we do a little bit of TA, since gold is doing gold things. We got to go and check that out. First of all, Bitcoin balance on exchanges. Falling and falling and falling. Historically, bullish, okay? Historically, people withdraw Bitcoin from exchanges with the intention of holding on to it for a while rather than selling it. And thus, supply down, price usually has to go up to find new sellers. Speaking of price go up, really, really nice chart here from Kushi. At the top, we've got Bitcoin potentially looking to do this 5-wave up impulse, which would give us, by the way, approximately 220k by before October, around October, September, October maybe, let's say. In case you think that's impossible, well, check out silver below from 2008 to 2011. Is it not possible that we get a 5-wave squeeze, something like this? Is that not possible? I think it's possible. I tell you one thing I know, sentiment's really bad out there and people do not want to entertain a July top. Right? July, August, September, whatever you want to call it. So that's something. That is not nothing, at least. Meanwhile, Bitcoin still holding above the breakout level, okay? Still holding above its cycle lows, whichever one you're going to use. This angle, it's not really set yet. I'm not committed to this angle, right? This is like a side chick of an angle. I'm not really worried about it at the moment. But once we've got some confirmed structure, some more structure built out, then we will wife up this. What am I talking about? We'll commit to this trend line later in life. Oh dear. For now at least, okay, long and strong continue to push, see what the market will give. Looking in the level 3 member section to increase exposure to some of these positions if we can get a push up, right? But I want to see some breakouts. I want to see some breakouts first. I can't be buying into or underneath resistance, but hopefully we should get some moves. Oil, perfect touch of resistance, okay? So oil likes to do this thing. Actually, that's the point. I was going to talk about this. Oil likes to run everyone's stops, okay? It's like a gangster out here. It's running everyone, taking everyone out, right, before it's ready to actually reveal its direction. So as an exercise, I wonder if this would work, okay? Just as an intellectual exercise, if you want to call it that, or a thought experiment, okay? Let's say we didn't know that oil likes to run everyone's stops. Let's say we didn't know about cycles. Let's say we didn't have any patience, right? And we just thought oil would go down, so I want to get short on a trend line breakdown, okay? That would be here, where the short starts. The question is, where would you want your stop, right? Now, for me, I'd kind of want it above here. I'd kind of want it above this local swing, okay? So here's the exercise. Can we make the assumption that oil is going to run everyone's stops, and thus this position, which is really obvious, would get stopped out? And if that's the case, then can we use this stop loss level, okay, above this swing, to set a limit order and short from there instead? Can we just assume oil is going to be gangster, oil is going to run everyone's stops, okay, and therefore would we rather have something like this? So as an intellectual exercise, I wonder if, by first determining where the stop would go for the obvious trade, can we find a sweet spot of an entry by putting our limit orders at the obvious man's stop, right? So that's just an idea of mine. Let's see. If this thing does just completely reject off of resistance, then maybe the way to do it would be like this, right? Maybe something like this if we get a strong push off. Certainly if we get a failed cycle, we'd expect the remainder of the cycle to be downwards. But something is telling me, right, just because of the amount of times I've traded oil, that if you were to take this trade, you probably would want your stop up there, like I said. And thus, if you want your stop up there, it probably means oil is going to run this level. Okay, that's just what it likes to do. So that'll be an interesting thought experiment, interesting way to kind of think differently about where I want to put my entry. Like I said, I'm on guard here because if it does just reject off of here and it is quite obvious and we don't have to do anything silly like try to guess where everyone else's stop loss is, then maybe we can get ready to short here. But keeping a close eye on that anyway, I think it'd be an interesting couple of weeks whilst we look for an entry to short oil. Gold, as we kind of already touched on earlier, okay, that looks super bullish. And I know a lot of people hate on gold, but give it time, okay? Give it time and everyone is going to love gold. For now, at least, looking for a pullback into a cycle low, okay? And then we will have completed 1, 2, 3 daily cycles, all right translated, looking for perhaps a left translated fourth into that weekly cycle low. So we're dealing with that. If you're a member, obviously, you're going to be happy at open today because silver and therefore its related positions are probably going to fly. So, you know, continuation to the upside. It's not giving us the pullback to backtest the prior $30 level. So maybe that's coming. Maybe that comes much, much later. Either way, okay, bullish, bullish, bullish. DXY, notice how this is barely, okay, barely hanging on to support. Get a breakdown here and this yellow squiggle becomes invalidated. We start to look for this way lower down and we will start to expect much lower DXY prices. In fact, I think I would be targeting a new low below this prior low. That would be my expectation. I also think that we might even be able to entertain, if it was quite sharp, perhaps into June or July, that this will be the 3-year cycle low, not this one, okay? Particularly if it's the lowest low. So if it undercuts that low, then that is not the 3-year cycle low, and instead, this probably is. So that's major, because that means then we get this big parabolic advanced deflationary bust out of that 3-year cycle low. That was the expectation a long time ago. That's been the expectation since the top, but I don't want to declare victory on this trade, really, because the call was that this would be the top, that we would do something like this, right, down 3-year cycle low, and then go. And really, this entire move here forced me to change stance, forced me to pivot. And so I don't want to say, well, yeah, I told you so, right? Because not really, right? I got chopped up here, had to pivot stance, and now I'm getting ready to pivot back, which is fine, okay? I'll chop and change as the market reveals new data to me. I'm never married to any idea or bias. But one thing I will say is if we do start to break down here, then it implies the 3-year cycle low is not yet in. If that's true, then there is no better fuel for a blow off top in Bitcoin, gold, silver, and the stock market. All the while we're above support, then we're above support, and I continue to expect this yellow squiggle to play out. Like I said, lose that upward sloping blue support line, and that invalidates this idea. Notice how the 10-year yield, okay, looking kind of weak, working on a retest, resumption lower, which tells me the 2-year bond yield is probably doing a similar thing. Remember, take out those prior lows, which are roughly speaking this yellow horizontal level. And again, this is more fuel for the melt up. This is more fuel for the blow off top. This is more fuel to push the metals and Bitcoin way, way, way higher. And if all of that is true, okay, then you know what comes next. I'm your boy Camel. Welcome to the week. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.